And it's 10 a.m. right here in Lagos, Nigeria. It's a midweek trade right here. Let's get to the top stories that set your agenda now and tell you what to do with those trades you're planning at this point. Starting with oil, we're seeing oil prices, they're down for a third session today as plans by major producers to raise output in April, combined with concerns about U.S. tariffs on Canada and Mexico and China will slow economic and fuel demand growth. That's hammered investor sentiment there. So after trying to get back to that $70 level, that's for U.S. WTI is down again 0.60%. Brent $70.89 a barrel, down lesser there, 0.15%. So investors in market there watching out for what's playing out with the tariffs at this point and oil demand going into April. So so much to unpack right there, but let's get a check on what's playing out here. The Central Bank of Nigeria has lowered the exchange rate for calculating customs duties at the ports. Data from the Nigeria Customs Service website shows that importers will now pay 1,498 naira 48 kobo per dollar, down from 1,500 naira 23 kobo to the dollar on Monday. The CBN sets the customs duty rate based on the closing exchange rate in the Nigerian foreign exchange market, that's NFM. The Nigeria Customs Service applies the FX rate from the Form M opening date to determine import duties, ensuring consistency in duty assessment. On Monday, March the 3rd, 2025, the Naira closed at 1,498 naira 98 kobo to the dollar, influencing the new rate. And the federal government has launched the Treasury Management and Revenue Assurance System to replace the remitter platform for revenue collection. The new system, introduced by the Office of the Accountant General of the Federation, follows directives from President Bola Tinubu and the Minister of Finance to improve Treasury Management, Revenue Assurance, and budget performance for MDAs and federal government-owned enterprises. The system goes live today, yesterday, March 4, 2025. The phased-out rollout with MDAs currently using remitter, they will now access funds through TMRAS, at this point TMRS, via the OAGF website. Let's get a check on how your money performed yesterday. We see the equities market close on a downbeat note with the all-share index falling by 51 basis points, bringing the year-to-date returns to 3.86%. The market's gains were mainly driven by strong buying interest with NEM Insurance, International Breweries, and NASCOM there. But even with all of that gain, we still see a drop there, 0.51%. Trading activity saw an increase with both total volume and value traded about 28.36 and 21.18%. And for the market, definitely we're seeing the leaders there for volume, trades by volume. Ila Lakes that had about 26 million units traded. Zenith Bank about 25.65 million units traded, and then Zenith Bank had 1.23 billion. So again, we saw the banks again sell off to the banks. That's with the banking counter. The tier one banks again were down. We're looking at the sectors that we track. Oil and gas that had about 38 basis points. Consumer goods about 37 basis points. So we're still seeing weakness there for the close. But the markets are open now. We'll see if investors might come today with cherry picking for this midweek trading session. All right, to other stories now. To company news, the Seplat Energy PLC reported a record revenue of 1.65 trillion naira for the 2024 financial year, up from 696 billion naira in 2023. The company's profit before tax, that's PBT, nearly doubled to 561.4 billion naira compared to 125.5 billion naira the previous year. Despite a 9.8% drop in gross profit in dollar terms, the company's Naira gross profit surged to 710.1 billion naira from 349.3 billion naira in 2023. The company announced a final dividend of $3.06 per share and a special dividend of 3 cents payable to shareholders on May the 9th, 2025. Seplat's current share price, that stands at 5,700 naira. All right, so the Ministry of State for Industry, Senator John Eno, says he's committing support to assist women in small-scale businesses in the country. He made the comments at a meeting organized in recognition of the upcoming International Women's Day 2025 celebration happening on Saturday, the 8th March. The minister reiterated the government's efforts to ease financial access through the Bank of Industry and facilitate loans disbursement to micro and small enterprises in Nigeria. Take a listen.
Is under them. Good evening, Lord. And we're asking.
We need to have an industrial strategy that targets and focuses on women and that is able to deliver on the kind of change that we're looking for. Deliver what I call inclusive, innovative, and intentional, results that harness the potentials of women. And I think that we can list these amongst about 3 or 4. We need to break down the barriers that limit access to financing, to infrastructure and to global markets. We need to break down those barriers. We need to create the right policies that recognize women as key drivers within the industrial manufacturing space. We need to build an ecosystem where it is not necessarily the gender, but the talent that gives rise to positioning that we find in the sector and in the industry. And that's why, for me, the Industrial Revolution Work Group represents the strategic engine, to drive that change.
All right, now to our first conversation. Nigeria's oil refining capacity, fuel prices and inflation are closely intertwined, impacting the country's economy and everyday life. Despite being one of the largest oil producers in Africa, Nigeria has struggled with limited refining capacity. But with the emergence of the Dangote refinery and coming online of state-owned refineries, Nigeria is gearing for PMS production with export prospects. But how do we determine the price of PMS in Nigeria, seeing what's playing out so far? Let's discuss this now with Professor Adeola Adeniki, who is the president of the Nigerian Economic Summit, joining me right here in the studio. It's great to have you.
Yeah, thank you very much, Ladi.
Prof, I've been trying to get this interview for the longest time, and finally, because of your busy, schedule, I was able to land you for this one. But thank you so much.
It's a pleasure to be here.
For coming today.
Right.
And I don't know when last you bought fuel.
Yeah, a few days ago.
Yeah, what price did you get it at this point?
Well, my driver did. I think it was. I think the price is coming down.
Right. Yes.
From what I so which is good for consumers.
Right.
Yeah.
Really good for consumers, and I hope it goes lower. And I'm sure some of us consumers are praying it goes lower. But seeing this downward price movement and seeing what's playing out with the Dangote refinery, oil marketers, and the NNPCL, at this point. And there's some kind of price determination, mechanism playing out at this point. And it seems Dangote refinery is the price leader, or the price setter, at this point. So how are you seeing all that's playing out now, right here?
Yeah. It's quite interesting. Many years ago, actually, my PhD thesis, was actually on efficient energy pricing. That was about 30 years ago, and it's interesting that most of what I predicted at that time, what is playing out in the industry now. Now we're getting to a place where the interplay, the competition, among these players, Dangote, NNPC in particular, and import, is going to lead to a situation where we'll have something that is close to an efficient price in the industry. And with that, you're then going to have two possibilities. One possibility is that the producers who are not efficient, may either exit the industry, and you have a situation where you have more people, more players coming. And I foresee more players are going to come in. Why? Because, one, you have a situation where the price is market determined. Two, you have a situation where, some of the local producers, regional producers, are likely to set up modular refineries, so as to ensure that they diversify their income base, instead of just exporting. So they want to say, look, let's take advantage of the domestic market. So a lot of investment will come into the downstream, and I think that is going to be good. The only concern that I have, and I think the regulators also have to be very, to be very careful about this, is to ensure that this competition is healthy. Okay, healthy in the sense that it's not, nobody is trying to be, a market leader is not trying to chase away competition. Okay, and deliberately, because it's possible. Okay, in other price or some of the pricing system we have, where a competitor, a producer, deliberately sets the price so low. Okay, so that in the short run, it's going to get some losses, based on losses or marginal profit, so as to get out of the market, high cost producers. Okay, those are high cost producers, and eventually when they exit, then it brings up the price again, and then dominates the market. And at that time, it's able to exercise monopoly power,
Right.
which would be to the disadvantage of consumers.
So, it's quite interesting. It seems, when you look at Africa and you look at most of the oil producers, they seem to have maybe just, one or two refineries. And if we take a look at, let's say, a country like South Africa now, let's look at, some of these countries. Nigeria, definitely, we have the Port Harcourt refinery, Warri refinery, Kaduna refinery, and Dangote refinery. The other two, we're seeing them come online, at this point. South Africa, we have Engen refinery, Sapref, Caltex, Natref, Bay refinery. So that's about five, in South Africa. They're a giant when it comes to, refining. In Ghana, Tema Oil, Platin Gas Refinery, Aquaba, Angola, I think they have about two major refineries in Angola, Luanda Refinery and the Cabinda Refinery. So, looking at Africa, at this point, it seems we're lagging behind when it comes to, producing refineries in the continent. What do you think is the right amount of refineries a country, should have? A country like Nigeria, a big oil producer, at this point. And we also have state-owned and private, at this point. Who should dominate, state-owned or private?
I think the market forces we should determine that. I don't think we need to come up with what is the optimal number. Okay, businesses go into a sector when there's profit, when there are opportunities there. Okay, and the more the number, I think the better for competition. Okay, and like I said, in the case of Nigeria, one good thing is that you have a lot of, because we are an oil producing country, we also have a number of marginal oil-free producers, indigenous oil-free producers, who are likely to go into refinery. It's going to be very small, modular, some 1,000 barrels per day, some a bit greater than that. But as much as they are efficient, okay, as much as they are able to have some competition, because what I fear most in this sector is dominance by one player that is able to exercise market power. Once you're able to exercise market power, the industry becomes inefficient, because then you determine what the price is.
Do you think it's too early to be afraid of?
Yeah, it's too early.
Having a monopolist, in the market, because we didn't have a functioning refinery,
right?
Before the Dangote refinery came online, and now we're seeing state-owned refineries, come online, at this time. So, what can we do to de-risk, the industry, at this point, from having, a monopoly? Is it possible at this point?
Yeah, no, I think the regulators should just be on the lookout. Should also have their template, for instance, to determine what is the margin, okay, for pricing of these products. There should be a margin based on the marginal cost and other costs that are likely to incur. So they should have some range that will tell you, okay, that look, if you are very efficient, this is the range of price that you are looking at, okay, and then given plus or minus around that, so that they can know whether any of the players is deliberately embarking on some price strategy to undercut the other players in the industry. But what we have now is healthy. Okay, it's healthy in the sense that hopefully the Dangote refinery is very efficient. That's why it's able to drive down the price, and is then forcing the the government produced, the refineries to also follow suit. Okay, so hopefully that is coming from efficiency. Now that is good for the market, and we should also allow for import. I don't believe we should get to a situation where we say, oh, we don't have to. We should close the door on import. The import should also be there as a check. Okay, to ensure that any time any of these players, want to, take advantage of the market, that other people can bring in their products.
But doesn't that put pressure on the Naira, at this point, if we still carry on with, encouraging some form of importation?
I'm not saying encouraging. I'm simply saying that we should have a bulwark that should serve as a check against any of the players trying to take advantage of the market. You see, because at the end of the day, you see, when you close import, what you are doing is you are encouraging, or you are somehow, I don't want to use the subsidy, the producer. You are on the side of the producers and against the consumers. But once you allow market to play out, either through import or bringing, entry into the market, then the consumers become the king, and that's what we want. In the economy to take place, that the consumers are able to get value for the money they spend. Because look at it now. We came from 175 naira per liters. Okay, it went to over 1,000. Now it's coming back. But substantially, it is a huge increase from where we were, in 2003.
Well, I still can't get used to these prices, no matter.
It's huge. The difference is really huge. So in terms of the consumers now, consumers are spending more proportion of their income on fuel and fuel-related expenses.
Right, and we keep talking about the regulator, at this point. What should the regulator be doing, right now? Yeah. Because at the end of the day, we have other players that want to come into this market. Oh, when you say coming into this market, do you think it's an easy market to actually come into?
It's not. It's not.
And will it get harder, going forward?
It's going to get harder. It's going to get harder in the sense that if you are a small player and you are not efficient, okay. Nowadays you have modular refineries. Scale is not necessarily an advantage, okay, because you have modular refineries, small but efficient, okay. Now, it is going to be a lot more difficult because you have now players who are determined to ensure that this market, okay, they keep it, it's not as open for everybody as, it's not open to everybody. I think that is the long-term strategy that I'm seeing. Okay, there's a lot of investment that have been made. Okay, and therefore you want to ensure, okay, that you protect that investment. But the good thing also, Ladi, I think you made reference to it, is that there are also possibility for exports. Okay, so the players should not just be looking at Nigeria. In fact, Nigeria has an advantage because we produce this crude. Okay. And if our refinery is very efficient, then we should be able to produce at a cost that will enable us to penetrate, some of the neighboring countries where, they are oil importers. So I think, and that is what the discussion, in my view, that the regulator should be having. Okay, the regulator should not be fighting on the players. It should not seem as if it's adversarial. Okay, it's to bring them to the table and say, okay, what do we need? Okay, because the opportunity should not be just for us to be self-sufficient, to meet domestic needs, save imports, save, spending money on imports, but we can earn a lot of money, okay, by going to many of these African countries, taking advantage of after, and then, promoting, Nigeria's access into any one of this market. So that should be the goal. So if that is possible, then a lot of people can come in. A lot of players can come into the sector, remain domestic market, meet, around your area, so that some of the transportation costs will be reduced to the consumers in that neighborhood.
Right, because another issue, when it comes to pricing is logistics.
Right.
Around the distribution of the product. What are we doing right now, and what do you think we should do better?
Yeah. I hate these trucks on the road.
I don't like them too. I don't like seeing this.
And I think Nigeria is the only country where, you have to move petrol products, over thousands, hundreds of miles using tankers. It's not efficient, and it has not always been like that. That is why I think I'm excited by what is going in the sector now. Because like I said, I've been looking at this sector. My PhD thesis was on this. Is that once this deregulation fully takes place, okay, and you have investments going to depots, going to pipelines, going to So what basically will happen is from the refineries, okay, you just put these products into pipelines. It goes to depots in the various states, and then all the tanker draws, it will just come and take from the depot to nearby, petrol stations. We need to get back to that, okay? So the regulators and the governments will now find a way of creating those incentives that will allow for more investments, in pipelines, because that is the most efficient way, or using train. Okay, I was in Canada some few, sometimes last year, and I was excited when I see train, with carrying stocks of fuel, from one part to another, so that is what we need to do to enhance logistics, reduce some of the logistics.
And that will help also de-risk our roads, at this point, because I get a lot of anxiety when I'm driving and I see a tanker just coming beside me. I want to move.
It's not just you. I mean, we've lost so many lives needlessly. One, two. I mean, the roads have been compromised. It's roads that were supposed to last for many years. The tankers have destroyed it. We have thousands on the roads. They are very, very inefficient. They are risky, and therefore, the next phase of this regulation should be how to take them off. At least, I know now they've said that. Trucks with 60,000
limiting what you can carry.
Yeah, but we need to go do more, to encourage investment in the sector.
All right, so Prof, we have January inflation. The rebased numbers and coming out at about 24%. And with what you're seeing playing out, with PMS prices and expectations, going further, hopefully prices go lower. Do you think we're going down from here when it comes to inflation in January and other months coming? With the rebased data?
Yeah, with the rebased data. My hunch is that yes, okay? But how far we can go would then become an interplay of a number of factors, okay? Because we get to a point where prices become sticky, downwards in particular. I remember in 2018, 2019, when I was still in the FPC, that we got to a place where no matter what we were doing, the prices were just not moving. They became very sticky. But we're not yet there. So with the rebased figures that we have now, and with what is going on in the petrol market, and the exchange rate that is also appreciating, albeit marginally, you're likely going to see some downward trend. Okay. And hopefully that will also lead the MPC to start, unwinding, and that will also force interest rates, to make, interest rates to start going down. So all those combinations are likely to exert some downward trend. Okay, but then, the price of crude depends on a lot of factors.
We're seeing crude prices down.
So it depends on a lot of factors. It depends. The American government is doing so much trying to trouble the global market, the global trade, and how that plays out will also impact on what is happening to crude price, or the exchange rate, global economy, and all of that will have implications on the directions of inflation in Nigeria.
Right. I guess it's 2025 is looking very interesting.
Very interesting, unpredictable.
Oh, very unpredictable.
The uncertainties are just they're much higher now.
And investors still have to make a decision.
They still have to make a decision.
Quite incredible. Thank you so much. It was great having you, Professor Adeola Derisking, who's the president, the Nigerian Economic Summit.
Society. Sorry.
The Nigerian Economic Society.
Right.
Thank you so much for that correction. All right. We'll take a break now. When we come back, we're heading straight to find out what played out in the fixed income market and FX market. That's in February, and what to expect in March. That's next. Just stay with us. All right, let's get a check on the fixed income market. And to help us unpack this, we have Chuka, Mr. Chuka Nwachukwu. He's a group head, balance sheet management at UBA. Great to have you. Happy New Month.
Good morning, Daladi. How are you?
I'm fine, thank you. So let's start off with the fixed income market performance in February. What would you say were the key trends you noticed?
Yeah, thank you very much. So in February, we saw a slight decline in yield on the fixed income market, on the bond side, and especially on the T-bill side. We saw yield decline by almost 150 to 250 basis points. The last auction dropped by about 189 basis points, and so that gives you an idea, what I mean when I say that yield had dropped significantly. We expect to see this continue, into this new month. On the bond side as well, we've seen yield drop as well, but not as high as that of T-bills. But I mean, gradually the bond yield is declining.
So, what do you think contributed to the drop in yields for the T-bills?
I think it's basically, if you see what the DMO, in extension, the federal government is doing, they want to borrow, but at the same time, they don't want to borrow, too high, because of course the cost of debt is already too high, almost over 95%. So the decline in yield, it's expected, being that the government already has front-loaded, what they intend to front load in this first quarter, and so they are not so much aggressively in terms of borrowing from the fixed income market. And again, another thing is liquidity impact. We've seen over the past 1 month well over 2 trillion matured in place of bond as well as T-bills and then OMO as well. So those liquidities are in the market, and then of course investors are trying to see how much they can pick from the market, and that has further depressed the yield.
And did you see any impact, from the rebased inflation data we got in January, for January in February? Did that have any impact, on the market, or are you expecting more kind of reactions to that?
Yeah, absolutely, and that's one of the major contributions, in terms of decline in the market, and we've seen it played out in the secondary market, especially on the T-bill side. And so, when inflation dropped by 34% to 24 levels, and that shows you that the government is beginning to meet the target of 15%. And so, it's no perfect. Investors obviously know that this trend, we further decrease the yield, and so people are trying to buy as much as they can, front load, like I said earlier, as much as they can, because we see this yield going to 13%, 12%, in the next two quarters. We see it decline to about 11 to 12%. So it has a major impact, in the fixed income market.
And today, it's another Wednesday here. We have an NTB auction. What are you expecting?
Yeah, we see an expected decline in yield. Last auction, the government issued about 700 billion, and then 774 billion was sold. Subscription was well over 2 trillion. So you can see the type of liquidity in the market, and you can see why the yield continues to drop. So today, DMO is offering 650 billion. We expect to see, of course, oversubscription, and then hopefully they will oversell. But then we also expect to see decline in yield. The last auction, 1 year, printed at 18.43, and that's about 189 basis point drop from where the previous one came out at 20.32. So we expect to see yields further drop, maybe about 50 basis points from the last 1 year result, maybe around 17.75 levels. So we expect to see further drop in yield, like I said earlier.
All right, and looking at the Naira now, it did close at about 1,491 Naira to the dollar, the NFM, that's for the NFM rate. So, looking at February altogether, I guess it was quite bullish for the Naira.
Yeah, yeah. I mean, the Naira has actually performed incredibly well in February. Even in January, we've seen stability around 1500. For example, yesterday it traded around 1505. Currently, this morning it's trading around 1503 to 1505 levels. So we've seen stability, and then of course that also boils down to what the CBN has said earlier and what they are trying to do. They are trying to, to flood the system, the market with a lot of dollars, and that will also, help reduce the demand. On the parallel market, for example, we've seen them intervene, as well as they've also intervened in the the market where the players the banks played in. So we've seen gradual decrease in demand, as well as more increase in supply. And so, I mean, like I always say, simple economics, when demand outweighs supply, of course the price will drop. So we've seen stability, and I'm hoping that this stability will continue into the second quarter or the third quarter.
Yeah, it's quite beautiful seeing, supply outweigh demand in the FX market. I hope that keeps going. But do you think the CBN, has the firepower to, keep intervening even in this month of March?
So currently, our external reserve is around $38.9 billion. That's for me, is healthy, but I don't think it's healthy enough for CBN to continue to intervene. However, CBN has also been able to raise, or federal government rather, has been able to raise dollars through other means, the dollar-denominated bonds, and as well as other factors. So we've seen this trend, that government gradually is telling us that look, they have what it takes to, to defend the Naira, and then that they want to keep the exchange rate stable at this rate. And one of the most important thing that they've done is the convergence between the official market and then the parallel market. So now you don't see that huge difference. And so a lot of customers prefer to even come to the official market, to get dollar, because of the fact that, number one, official market is now gradually being liquid. And secondly, I mean, it's safer, to play in the official market. So I think that, as they go on, of course, the oil production has also increased, and that means more production. That means more sales, and in extension more revenue. And so this and so many other factors will help to to maintain stability. And then of course, government, CBN in this case now, will have enough dollar to be able to defend the Naira. So I see it very stable, like I said earlier, within this range of 1500.
Right, I guess 2025 is looking like a year of stability, for the Naira with what we've seen so far. But there's a lot of talk about the tariff wars right now, with retaliatory measures by countries being placed on these tariffs. But how do you see this impacting, what we're seeing with the Naira right now, and the CBN's ability to keep intervening? Are you seeing any risk there?
Well, basically, I mean, the tariff war is happening within the major economies and the big countries. So I think that that should be a plus for us in Nigeria. Because we will see a lot of these investors, coming into developing market like us. So for me, I think that the tariff war, is all politics, number one. Number two, I don't really see much impact, on what is happening here. I think that the government is basically focusing on, stability, inflation, reduction of inflation. But for the tariff, I do not see. Even though it would have affected us if Nigeria is a major exporter of some of these items or goods that are tariff is affecting. But then we only export oil, at least for now. But it doesn't really affect us as it were. But if anything, I think Nigeria should benefit from it because you see some of these investors, moving into our market where you have rates as high as 18, 19, 20%. So why would you want to continue to play in the market where uncertainty is, at least for now, pending when the tariff issue is resolved between the major countries, America, Mexico, and then Canada for now.
Right. I guess our market is looking quite attractive at this point. But thank you so much. It was great getting your perspective. That's Chuka Nwachukwu, who is the Group Head, Balance Sheet Management at UBA.
Thank you very much, lad. Thank you.
All right, we'll take a break now. When we come back, we'll find out what's going on at global economies. That's in a moment. Just stay with us. Welcome back. Well, there's a lot happening right there with the global economies that we track, and it's still all about tariffs. And it's coming in with more tariffs, or maybe less at this point.
No, it's not yet time to talk about less tariffs.
Okay.
It's time to talk about more tariffs.
More tariffs.
Even though background noise and talks
Right.
is suggesting perhaps there might be a bit of compromise, but we're not sure yet.
I can imagine how markets will react to some kind of compromise with these tariffs.
No, markets
That'll
are
be
already
incredible.
reacting. For instance, European stocks today are expected to be higher because of the suggestion. We haven't heard of definite announcement
Right.
that the 25% tariff on Canada and Mexico that kicked off yesterday, that there might be a compromise. We're not even sure yet. It's still like a rumor, but
Maybe a pause for a month or
yeah,
so.
maybe.
We'll check.
Good morning, everyone. Welcome to the Global News segment of Business Morning. We start from Europe, where German bonds slumped as investors brace for an historic increase in borrowing to fund defense and infrastructure investment. The yield on 10-year notes rose as much as 23 basis points to 2.73%. That's the biggest jump since June 2022. After Chancellor in waiting, Frederick Merz said that he would set up a 500 billion euro, that's about $553 billion special fund as part of a sweeping fiscal overhaul. Euro rose 0.4% to 1.066, on course for its biggest three-day gain since late 2022, with investors betting the increased spending will boost European economy. On Tuesday, the Conservative Alliance and Social Democratic Party, that's the two groups that are expected to form the next coalition government following last month's election, agreed to try to reform the constitutional debt brake system in order to enable defense spending in excess of 1% of the GDP. Well, is widely billed as likely to become the next chancellor of Europe's largest economy, and said that they would also seek to create 500 billion euro credit finance special infrastructure fund over 10 years. Alternations or exemptions to the debt brake system have been seen as crucial as a way to allow fiscal loosening to boost Germany's struggling economy and increase military spending. The step remains politically contentious, and the euro extended its late Tuesday rally by another 0.47% against the US dollar. And we're still staying in Germany now. Adidas has reported an uptick in fourth quarter sales that exceeded expectations as the retailer shakes off weakness in North America and China demand. The German sportswear giant recorded a 19% increase in revenue at neutral currency rate to 5.97 billion euros in the three-month period, ahead of the 5.72 billion euros forecast that analysts have been giving. Operating profit came in at 57 million euros in the fourth quarter compared to a loss of 377 million euros in the same period of last year. Adidas is attempting to grow its market share in North America amid declining sales at Nike and a broader retailer shift away from an overdependence on a weaker China. Adidas North America sales, which fell 7% at currency-neutral rates in the third quarter, have struggled to recover from the termination of its once lucrative Yeezy sneaker line. The sportswear giant was forced to axe the Yeezy line after terminating its partnership with Ye, the rapper, formerly known as Kanye West, over a string of anti-Semitic remarks that the rapper made in 2022. The company said last year that it's expected to sell the remainder of its Yeezy inventory by the end of 2024. Chief Executive Bon Golden has been looking to distance Adidas from the loss that Yeezy made and to spark a wider turnaround of the brand since taking the helm in January 2023. Well, all of this meet in the European stocks market, where it's heading for a higher open on Wednesday amid optimism that the United States President Donald Trump's 25% duties on Canada and Mexico could be relaxed, with investors also paying attention to the potential reform of Germany's contentious debt brake system. The UK's FTSE 100 index is expected to open 56 points higher at 8,806. Germany's DAX supposed to be up 416 points to 22,733. France CAC 146 points higher. Italy's FTSE supposed to be 403 points higher according to data that's being circulated. And the introduction of fresh US tariffs has rattled global market sentiment amid concerns that they will reignite inflation and escalate a global trade war. Well, one country at the middle of that global trade war is China, where they're set for a forceful economic growth goal at about 5% for 2025, raising expectations for officials to unleash more stimulus later this year as they confront the trade war with President Donald Trump. Premier Li Guang announced the targets on Wednesday morning as he delivered the government's annual work report to the National Parliament in Beijing. This marks the third straight year that has China set that goal, but repeating it again may be difficult. Meanwhile, China has unlocked more fiscal stimulus on Wednesday, promising greater efforts to support consumption and cushion the impact of escalating trade war with the United States on an economy that Beijing is determined to grow by another 5% or so this year. The premier, in a speech at the opening of the annual meeting of China's parliament, warned that changes unseen in a century are unfolding across the world at a faster pace. And we know, of course, it's connected to the trade war. And President Donald Trump has said that he received an important letter from Ukraine's leader, President Zelensky, looking to smooth out over the clash that erupted during a contentious Oval Office meeting, but held back from lifting a U.S. pause on military aid or announcing a revived minerals deal. Addressing a joint session of Congress on Tuesday night, Mr. Trump read out part of what he said was the letter from President Volodymyr Zelensky, and he echoed a social media post that he wrote earlier, voicing regret over how the Oval Office meeting with Trump played out and saying he was ready to sign the natural resources deal that was scrapped over the encounter. Meanwhile, Ukrainian President Volodymyr Zelensky has said that his Oval Office meeting last week with President Donald Trump did not go the way it was supposed to, and he described the February meeting as regrettable. Notes that Ukraine is ready to negotiate about an end to the conflict. Now, let's have our correspondent, Maria Bird, join us now to tell us perhaps some background story about all of this and find out what's going on around this. Maria, can you hear me? Good morning.
Good morning.
Yeah, so it was a heated conversation at the Oval Office last week, Friday, and now we're seeing regrets, apology in one way or the other. What's the sentiment around the U.S. concerning this?
I think the sentiments around the U.S. One was not surprised, but surprised because the U.S. has been a strong supporter of Ukraine. I think there was expectations that there could have been some challenge with the meeting, but I think where the U.S. has stood for several years as its support level to Ukraine, there was some surprise in kind of how everything panned out. Now, I think that the idea about coming together for a deal, I think that Americans would not be surprised about that. And I think that Americans are looking for ways to partner with Ukraine as they've done in years past. That does not depend on party. I think both Democrats and Republicans were very interested in one, as the president has mentioned, ensuring peace between Ukraine and Russia, and two, ensuring that Ukraine has what's needed, especially for those individuals who are negatively impacted by the war that are living
All
in
right.
Ukraine. So
All right,
very much a
Maria.
human rights issue.
Okay, Maria, just a minute now, just a minute. I'll get back to you. But to our DSTV viewers, right now we have to lead you to First Bank headquarters groundbreaking ceremony. It's happening at Eco Atlantic, obviously in Lagos. That's for our DSTV viewers. But for our other viewers, please do continue with us right here, Business Morning. And if you're watching on YouTube, you can just switch to the next stream and you continue here. So, Maria, you were saying.
Yeah, so I think that it's as you mentioned. I mean, coming forth around the natural resources, the deal that he's now wanting to entertain. I think that that's something that Americans will look to see how it all pans out. I think that this is no surprise, but definitely wanting to find ways to continue supporting Ukraine as much as possible.
Yeah, but you know, one of the sentiments that came out of that meeting also was it does seem like perhaps President Donald Trump is taking sides with President Putin because it looks like, you know, it was all Ukraine's fault. And even when President Zelensky tried to say, oh, we had tried to sign deals with Russia and it was not adhered to. So does that sentiment also run through in the U.S.?
Well, I think the U.S. and Americans who might have had, as we know, it's a very divided issue between Russia and Ukraine here in the United States. Previous administration was very supportive of military aid to Ukraine, but also wanting to ensure peace between the two countries. But we knew that Russia and the U.S. were going to have tighter relationships once President Trump was in office. They had relationships in his previous administration. I think that it was very clear that that would be a strategy moving forward. And so I don't think Americans are surprised. I think Americans are very hopeful that there could be peace talks between the two countries, and that maybe if there is a possibility that President Trump can assist with that, I think that's really ultimately what Americans are looking for.
Yeah, and then this perception that perhaps President Trump could tamper justice with mercy when it comes to the tariff, especially the one that started yesterday for Mexico and Canada. There's the notion that perhaps he could hold it off or reduce it. How true is that?
Well, the stock market yesterday, as you know, took a bit of a hit as a result of what they believe the tariffs at 25% on both Mexico and Canada. But the evening, the stock futures were showing signs of growth after the Commerce Secretary stated that there could be a deal. There could be some coming in the middle between the two. But I think that that is not a today issue. I think that we might see that next week, maybe potentially, to see if there's any coming to the middle ground on that. 25% tariff on Canada and Mexico, the two bordering countries. I think Americans are wondering how that's all going to play out because there is such a heavy trade relationship between the two. You think about just simple things like produce here in the U.S., which come from Mexico, and to think of the cost of those just skyrocketing. And so I think that's really some of the very basic things that people use each and every day that are in the stores that people will either be paying extremely higher prices on, or maybe some retailers will decide not to purchase them at all.
But can we say that the impact of this, we've seen the investors and the markets reacting to the trade tariff. Can we say it has slipped down to the everyday pricing of, I mean, you just talked about avocado and all of that. Is it being felt yet?
It hasn't been felt yet with Mexico and with Canada, but you do see other things around that potentially are direct relationship. Now, we've dealt with inflation. That's the other challenge. We've had issues with inflation even prior to tariffs. And so there's a mix of things happening at one time. We still have not been able to truly stabilize inflation, which was why we have not seen a lot of decrease in interest rates, and there's not an expectation for one anytime soon. And then you're also seeing, as you mentioned, the tariffs. And so I think there's multiple layers to potentially why we're seeing higher prices on some things.
All right, Maria, thank you so much. You'll certainly be on this story, and hopefully President Trump will be a little bit soft on those trade tariffs. But thank you so much for your time this morning.
Yep.
All right, so there you go, Ladi. Perhaps, last week Friday was the heated conversation. Let's make our way to the Oval Office. Perhaps we can change the mind of President Trump.
Yeah.
I mean, you heard Maria say things like avocado that come into the United States from Mexico. These are everyday products that people need to consume and all of that. And by the time, if this tariff persists, we can certainly expect. In fact, I know if it was Nigeria, just the announcement.
Yeah, the prices will be up already.
Seen the prices going up.
So I guess that's the major risk, experts have talked about, when it comes to these tariff wars. It's inflation.
Yes.
In the US, they've made, good progress, so far.
Yeah, it's kind of well sad because at the IMF meeting that we had in October at Washington, one of the things that IMF and World Bank were very proud about was that the world has made progress in dealing with inflation, and inflation had started the downward trend. So, I mean, with all of this, that can just be pushed aside because this is obviously inflation staring everyone in the face.
Right.
And we know the consequences.
And that's global inflation.
Yeah, that's global inflation.
And we have some countries that are still struggling, with taming inflation.
We're still dealing with very high inflation in Nigeria. So, and we are very closely connected to United States dollar, especially.
Heavily import-dependent countries too. That's quite incredible. Anyway, thank you so much, Ini. Definitely the global space. So much happening. There's so much drama. And we'll keep covering all of that drama right here on Business Morning. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.